adopt full knowledge about it. Like, you need to know one single pair. Like, in the forex market, there is a lot of pairs. There are a lot of pairs you can trade on to capitalize for your own profit. You need to know that one, as a beginner forex trader, you need to know that one single pair you like or you're willing to adapt to. Like, for instance, GBP USD, you need to know, like, okay, is this GBP USD, this is only the pair I want to sit on, that I want to master, that I only want to be trading. So that is it when I say you need to know pairs you must trade. Like, you need to adapt to the knowledge of that pairs. You need to know the movement of that pairs. You need to know what gave it spike, what makes the movement in that pair. So second on my list is trading section. Like, you need to know the trading section to the pair you are trading. Like, for instance, on the example I give on the first list was GBP USD. So for trading section for GBP USD, you need to know like what time GBP USD do move in the market. Like, for GBP USD is London section. I'm sure you know that, everybody knows that. So you know that GBP USD mostly have volatility in London section. So you have to adapt to it and have the sense that, okay, this particular pair works during this period of time. So with that, you are already building knowledge about your edge on how the particular pair you trade work in this section. So like that, you will learn when you know you trade the pair you want to be trading, then know the section. So next on my list is numbers of trade per day. Like, you need to know the numbers of trade you are willing to take per day. Not just jumping on any opportunity you see on the market and just trade them. So for instance, GBP USD, for the example I'm giving, you need to know, like, okay, on this GBP USD, you already know the pair you are trading, you already know the section it works, then you now need to know the numbers of trade you want to take per day. Let's say for the GBP USD, you can decide that, okay, I'm already going to be trading twice for GBP USD. Like, you need to know the numbers like that. You don't just come to the market in a particular day and just take any trade. In the morning you trade, in the afternoon you trade, in the night you just enter the market and just see any flashing event and just be like, okay, I'll take this trade, just jump in. And that's what will cost many beginners into losses, whereby you just start to lose money because you don't know what you are doing. But with all this said, and if you watch this video to the end, if you listen and be concentrated with this video, you're going to know what you are doing. It will help you to fix what you are doing in this market. So when you know the numbers of trade you are taking per day, it helps you not to have too much of trade, and it will limit your losses, whereby it will limit your losses. So that is that on the number 3. Then so next on my list is what we call risk management plan. So you need to know your risk management plan, like what you are, it's like you predefining your risks before you jump into a particular trade. Like, you need to predefine your risk and expect that you know your risks in lot size and in dollar value or any currency you're trading. So you need to like predefine your risks. That's what it says, risk management plan. Like, okay, now you already know the pair you're trading, which is first on the list. Then second, the section it works. Then third, the trade, like the numbers of trade per day. Then which is come to this, the next one, which is like risk management plan. Okay, you already know that, okay, this GBP USD is what I want to be trading. Then this is the particular numbers of trade I want to be taking. Like, let's say 2, for instance, you're taking 2 trades per day on it, and maybe then your risk, that is when your risk management plans come in. Okay, you know that, okay, I'm taking 2 trades per day on GBP USD. Then you'll be like, okay, let's say you are risking $100 per day. You are risking $100 per day, whereby you'll be taking 2 trades, and if these 2 trades goes in your, like, if these 2 trades you take goes against you, you're going to be losing $100. control, whereby it will reduce your losses, whereby you don't just trade every time. Just today you come into the market, you just don't have any risk management, you just jump into the market. In the market there's a lot of opportunity. So it's you that will use your IQ, your knowledge based on what you learn to adapt to the opportunity in the market. Not just expose yourself, because you also want to get from the market, and at the same time the market also want to get from you. So you as a forex trader, is you that will use your knowledge and be like, okay, I'm only risking this particular dollar for these two trades, and whereby if it does not go in my favor, then I'm out for the market for the day, then I'll come back another day to trade. That helps you to scale out revenge trading, whereby maybe you take the first trade, you lose, then the second trade, you lose. So since you already have the rule whereby you already know that, okay, I'm not taking more than this trade per day, it will help you not to bring what it calls revenge trading. It will help you limit it, whereby you don't have a rules. Maybe you take first trade, you lose, third trade you lose, second trade you lose, then you want to take the third one, and the third trade you are not taking it because you see a setup, you are taking it because you want to get your first two money back, and that will also still bring you into losses. So that is the fourth on my list, which is risk management plan. So right now we'll move on the fifth on my list. So the fifth on my list is trade one strategy. You need to adapt to one strategy. Many beginner forex traders, they just jump into any kind of strategy they see. If somebody posts a lot of wins on the market, a lot of wins on the social media, then be like, oh, what's your strategy, bro? You're killing it. Another person did the same thing with your strategy. So they now put so much of stop, and that brings them into confusion, whereby they don't even know what they're doing today. Maybe they're trading SMC, tomorrow they're trading ICT, next tomorrow they're trading liquidity sweep, blah 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 blah. You need to adapt to one strategy. That is where this fifth on my list comes in. One strategy, even though it's not working for the meantime, you still need to stick to it. People whereby beginners trader, when they use one strategy, they're killing it for the market maybe for a month, then maybe the market buyers not change, because the market buyers do change. So maybe the market now buyers change for maybe within 1 week or 2 weeks, then they'll be like, oh, my strategy is not working. They want to go and change their strategy, whereby they will start looking for, they're just confusing the step. So this helps you that you need to stick to one strategy, even though it's not working for the meantime. You need to stick to it and rearrange yourself, because what is not working in the strategy is not from the strategy. It will be probably from you. Maybe the errors is from you. So you need to go research, do cross check about it, back test on it, on the strategy, before you can say, okay, is this strategy I want to be trading. You can be trading SMC, you can be trading ICT, just adopt to one strategy, and that will also helps you to build your edge in the market. So next on my list is staying patient. In this forex market, you need a lot of patience. As a beginner forex trader, we don't always have that patience. Many traders, they don't have that patience. They just want to they're used to the dopamine of just clicking buys and sell, just click buy, just click sell. They're already used to the dopamine of just clicking buy and sell. If they are not clicking that buy or that sell, then their body wants to come down. So you need to stay patient and let the market show you what it's doing. Don't just predict the market and say, okay, the market is gonna sell, without you saying any strong conflicts or information about it. Then you just open for yourself, and at the end of the day, you just see that the market is bullish. Then you lost money again. Then you just predefine, you just predict the market that is gonna buy without seeing any strong conflicts. Then the market just starts selling. So that's what it even make the trading journey for you get frustrated to the extent that you'll be having this knowledge that you want to quit, because your brain will not be able to carry it, because and the cause is from your side. So you have to stay patient, let the market come to your level. sell, when to buy. Let it come in first. So let the market show you what it's about to do, not you predicting what it's about to do. Let it show you what the market is about to do. Then you now act on it. Not you predicting that okay, this market is selling, then you just open for a sale. Let the market show you, because before market moves, it gives information about its movements. It shows that okay, I'm selling. It shows okay, I'm buying. Okay, it shows I'm ranging. So after you have to gain knowledge about how the market moves. So you have to stay patient and let the market show that okay, I'm going on a bearish movement before you now act on the bearish movement. Or the market's saying I'm going on a bullish movement, then you act on it. Because if you understand market structure, or you understand candles information or anything about your strategy, you will know what the market is about to do next. Then you always act on what the market will do. And that is 6th on my list. Then 7th on my list, which is the last one, which is whereby you wait for possible trade setup. That comes in whereby when you're waiting for a possible trade setup, you don't rush trades. You don't just come to the market and just be like, okay, I'm trading today, wake up in the morning, just jump into a trade. Be patient to wait for a good trade setup. Taking not too much of numbers of a trade is not going to give you a number in the market. But the best thing is just wait for a good trade setup, whereby you wait for this setup. Maybe you can even wait for the setup for days. If you are a swing trader, you can wait for the setup for days, and if you are a daily trader, you can wait for the setup for hours. You just wait, let that patience be in you, whereby you wait for a trade setup, whereby then when the setup comes, then you open for whatever movement you are opening, maybe for a bearish movement or a sell or a bullish movement. Then you open, then you wait, and at the same time wait till the market give you your full direction, to your TP. So that is how to wait for a best possible trade setup. I don't want this video to be much. So these are the 7 things that will help you your game plan, that will give you that will help you shaping your LG in the market. Whereby you don't just come to the market, you don't just do anything. So first on the list, to remind us again, peers you must trade. There are a lot of peers in the markets, so you just adapt to one peers. Don't just jump in on any peers. So if you are a beginner, I'm saying, but because later in the day, maybe later in your journey, you can then be adapting to other peers. But as a beginner that you want to lay your hands in this market thing, you don't just want to convince yourself. Start with one peer or two, so that you have knowledge about it. Then the second on the list is knowing the section is being traded, the particular pair you adapt to. Know the section this pair is being traded. And the second and the third on my list is numbers of trade per day. Know the numbers of trade you are taking per day, maybe 2 or 3, maybe just 2. Don't trade too much. Don't take too much trade per day. It will help you minimize your losses, so that you won't be having a lot of losses in the market. And the fourth on my list is your risk management plan, whereby you know what you are risking on a particular trade taking per day. Maybe you are taking in London section clock in, you are trading GBPUSD, then London section clock in. You already tell yourself that okay, I'm risking $100 per day, I'm risking $200 per day, I'm risking $1,000 on this trade, depending on your account size. So that will help you predefine your risks, whereby you won't be having too much losses, and it will even help your psychology, whereby you already know, you already predefine your risk. You already know that okay, I'm risking $100 per day, and if this market goes against me, I'll be short $100. You already know that. The psychology, your brain already accepts that idea that if this market does not go in your favor, you'll be losing $100 per day. So at the end of the day, maybe the market doesn't go in your favor, then you lose $100 per day. Then your psychology, you won't have any emotions. You'll be calm. So that one brings the act of you revenging trade. That one brings any act of you just want to be greedy or just want to go revenge. So you'll be calm. That's the role risk management plan play. Then after that, the next on the list, which is the trade like strategy, adapt to one strategy. You don't just change strategies. That will help you. And the next second on the list was stay patient. Like you need to always stay patient. Wait for candle closures before you open on a trade. Let the market show you what it's about to do before you open on a particular trade. Don't jump into a trade and just do things without knowing what it's about to do. You don't need to know you don't need to know what the market is about to do before you can pull up on a winning trade, because the market is uncertainty. Like the market is uncertainty. You don't need to know that. Okay, you don't need to know that this is gonna be a winning trade before you can open on this trade. You don't need to know that. Just let the market show you a clip of what it's doing, then you act on it. Don't predict it. Act. Be an actor. Don't predict it. Don't just predict the market and just do things. And the last on the list, which is just best setup as possible. So I just rescheduled that for you to learn again. So that comes to an end of this video. So at this point, I hope you have grabbed one or two knowledge from it, and if so, please do well to hit the like button and smash this subscription button. Subscribe to this YouTube channel to be able to get more content like this, whereby it will help you shaping your edge in the market. Then you start to know what you are doing in the forex market as a beginner forex trader. So see you later. Bye bye. Enjoy this video and don't forget to subscribe to this channel. Peace out.